Hi students, so basically we have learned about financial ratio, why financial ratio is important, and we already learned the 5 categories of financial ratio, and we learned about the formula on 2 categories of ratio, which is liquidity ratios and profitability ratios. So I would like to show you an example using 2 financial statements. Berjaya Travel Incorporated income statement for the year ended December 31st, 2003, and as well as balance sheet. So basically, using these 2 financial statements, we can calculate financial ratio and do the analysis. Yeah. Okay, if we take a look at these 2 financial statement, yeah, which I guess students are already familiar with these 2 statements. For income statement, we have revenue uh, or sales, and then the less cost of goods sold, and then we get profit. Yeah, and then when we get a gross profit, we less with operating expenses and other operating expenses, then we get operating income, or what we call as earning before interest and taxes, EBIT. Yeah. If there is other income, then you add other income. Here means financial income. Yeah. And then less interest. If the company has a loan, yeah, they pay interest. So this is where the financing part comes in, yeah, interest. And then we get earning before taxes here. Okay, and then less taxes, 40%, we get net income. Then if the company have a dividend for preferred stock or common stock, we less from net income, then we get a retained earnings here. So basically this is income statement. Yeah. And for the balance sheet, we know that we have the asset side as well as liabilities and equity sides. Okay, so the normal format for balance sheet is asset on the left side and liabilities and equities on the right side. But financial report for real companies could be only on one side, whether they put assets on the above or liabilities and equities on the above, right? So basically, we know that current asset consists of cash, account receivable, we have inventories, and some companies don't have inventories if, let's say, they their business is on services like hotel, things like that. Yeah, prepaid expenses, and then we get the total current asset. Then the next category of asset is fixed asset, which is plant, machinery, land, and building. So total fixed asset, and we get the total asset when we combine total current asset plus the total fixed asset. So basically this one is provided for you. Yeah. Then we have on the right side is current liabilities, consists of account payable, notes payable, accruals, or other current liabilities. And then we get a total current liabilities here. Long-term debt, which is long-term liabilities. Yeah? Debt and liabilities is the same, right? Then we have equity. Equity consists of common stock, preferred stock, as well as retained earnings, where we add the total current liabilities, long-term debt, and common stock equity, common equity, then we get the total liabilities and equity. So basically you can this one you can add up total berapa lah, total equity berapa. Okay, so next we go to the first category of financial ratio, which is liquidity ratio calculation. We know that liquidity ratios consist of 3 types: current ratio, quick ratio, or acid test. Some book, they the term used is acid test ratio. Yeah, so it refers to the same thing. And then net working capital. So basically, in order to calculate liquidity ratios, all the items here are from balance sheet. So I copy again the balance sheet from here. Okay, I copy this one. Yeah, I put it here, balance sheet. So it's easier to see where we could get the figure. Okay, the first one, current ratio. The formula is current asset divided by current liabilities. So basically, we just need to find how much is the figure for current asset. So we go here, total current asset is 146 divided by current liabilities 79. Eh? So 146 divided by 79, we get 1.85 times. Ataupun X. Dekat sini dia tulis X. So basically this part, this industry part is given. Which means this shows, this part alright, is industry punya ratio. Whether how to get industry ratio, basically like last time I told you that industry ratio is where all the companies from the same industry are combined together, and then they average. They average, then they get the industry. Why do we want to put industry here? Just for the purpose of comparing Berjaya Travel Berjaya Travel punya ratio ni dengan industri punya ratio. So we need two numbers to compare. Kalau ada satu sahaja, we cannot compare and make the analysis whether the company is doing good or not. Yeah. So by this, we see that Berjaya, this one is Berjaya Travel. So basically, Berjaya Travel is a hospitality and tourism industry, whereby it's probably on hotel or something like that. And we see that the balance sheet involve inventories. Maybe Berjaya Travel Incorporated has developed a side business where they have a real product, and they sell a real product. Okay, so basically this is Berjaya punya ratio, and this is industry. So if current ratio for Berjaya is 1.85 times and industry as 2 times, which means current ratio for Berjaya is below industry. Yeah, that's how we compare, right? Okay, I hope that the other explanation, a better explanation, is to explain what does current ratio measure. What does it measure? It measures the capability of Berjaya Travel Incorporated to settle off the short-term debt using its current asset. The ability to pay its short-term debt. So by this, we see that the industry are capable more to pay the short-term debt compared to Berjaya. But for this ratio, nanti kita see the overall macam mana. Ada yang Berjaya lebih tinggi daripada industri, ada yang lebih rendah. Okay, the second ratios is quick ratio, whereby we minus inventories here. We minus inventories from current asset. So basically 146 minus, we find inventories here 82. So 146 minus 82 divided by 79. Then we get 0.81 times, whereby the industry ratio is 1.2 times. This to say that the Berjaya Travel quick ratio is below industry. Yeah? And the third ratio is net working capital. This is based on RM. Yeah? We just minus current asset to current liabilities, then we get 67,000. Yeah? And industry, of course, there is no net working capital because it's a consideration of many companies, so it's not available. Alright, so this is basically how you calculate liquidity ratios and how you make comparison. So basically this comparison, comparison, okay, like I said, it could be trend line ataupun comparative analysis. Kalau timeline berjaya tahun 2003 compared to 2002 sebagai contoh. It could be that one. But this one is comparative, whereby berjaya 2003 and industry 2003. Kalau comparative, it must be different company atau industry but same year. Kalau trend line, same company but different year. Okay. For comparative, the other method is comparing Berjaya with other company in the same industry. Contoh Berjaya Travel dengan Shangri-La, something like that. Yeah, must be the same industry. We cannot compare Berjaya with a Nestle. Yeah, so it's not comparing apple to apple. Okay, next we go to the second category of ratio, which is activity ratios, whereby activity ratio consists of 5 types of ratios. So asset turnover times per year, we calculate from sales divided by total assets. So sales are from income statement, whereby total assets is from balance sheet. So I crop the income statement and balance sheet of Berjaya Travel Incorporated, only the figures that we want to use in this part, whereby sales is 1.5 million, considering this so we consider is 1,500. 1,500 put here. Okay, divided by total sales. Total assets. Total assets is 766 divided by 766, then we get 1.96 times. And when we compare with industry is much more higher, 5 times. So basically Berjaya Travel Incorporated way below industry ratios. The second, okay, you need to also explain what is asset turnover. So basically the way you explain is Berjaya Incorporated asset turnover is 1.96 times, which is the ability to turn this the total asset to sales is only 1.96 times compared to the industry by 5 times. Maksudnya apa? Maksudnya adalah Berjaya Travel ni dia rolling, dia punya total asset ni hanya 1.96 kali sahaja setahun kepada sales. Rolling. Dia tukarkan aset ni kepada sale sebanyak 1.96 kali sahaja berbanding dengan industry average which is 5 kali. Dia tukarkan total asset tu kepada sales. Okay, yang kedua, account receivable turnover, where we calculate from sales divided by account receivables. Sales is 1,500, whereby account receivables is here 44. Divided by 44, then you get 34.09 times. So the same, the way you explain the answer is by telling what is account receivable turnover measure and comparing it with the industry. Yeah. And the third one is average collection period. Berapa hari dia memerlukan untuk mengutip hutang dia. Yeah. Account receivable divided by daily sales. We know that account receivable is from here, 44. Daily sales is when we take yearly revenue divided by number of days in a year. So account receivable is 44, sales is 1,500 divided by 360 days. Then you get 10.55 days here. Industry, 6 days. What does this mean? Okay. Kalau yang ni tadi kita nampak dia sikit berbanding industri. Tak elok. Tapi yang ni dia dapat tinggi daripada industri. Is it good or bad? Average collection period measure how many days that the credit customer pay the company. Therefore, the higher the days means it takes longer for Berjaya Travel to get the money from the customer. So it's not good. It's not good. I mean, the industry are much better in the sense that the industry is 6 days only, and Berjaya took 10.55 days. So that's how you explain about the answer. Okay, the number 4 activity ratio is inventory turnover, where we calculate using COGS or sales divided by inventories. But in this case, they use sales. They took sales. So 1,500 divided by inventory, 82. Sales here, 1,500 divided by 82. So you get 18.29 times. Comparing with the industry, ini industry, 20 times. What does this mean? This means how many times that the company convert its inventory into sales. Therefore, the higher the number, the better. So in this case, Berjaya Travel is below industry average. And the final ratio for activity is fixed asset turnover. Okay, if let's say you want to calculate COGS divided by inventory, right? COGS is 450. Okay, and then just divide it by inventory, 82, and you find what? That's all. So for this one is how much the inventory roll into the cost. COGS is the cost. Sales is how much they get. Okay, ni boleh calculate sendirilah. Okay, then fixed asset turnover is where we divide sales to fixed asset. sales is 1,500, fixed asset we get from here, fixed asset total lah, we take the total 620, so we get 2.42 times, which means the company use the fixed asset and roll it 2.42 times to generate sales. Okay, but here they did not provide the industry average. So basically this is for the first part of tutorial. Okay, we continue with the other three ratios.